Hi everyone. Now that both SoFi and Upstart have reported their earnings and I've had a chance to go through and analyze both of their earnings reports and earnings results, I thought it'd be a good time to make a video on which one is the best growth stock to buy. Is it SoFi or is it Upstart? So that's what I'm going to do in this brief video. So let's begin. In the most recent quarter, SoFi's revenue increased by 43% and the net loss improved to 34 million. The company also reiterated its target to become profitable on the bottom line by the fourth quarter of this year. The big thing that changed with SoFi is that personal loans are now making up a larger portion of its loan portfolio now that home loan demand has decreased considerably and the student loan demand has also decreased because the payment pause on the loan moratorium. That said, SoFi has done an excellent job increasing its total members. It increased 46% to 5.7 million. Compare that with Upstart, whose revenue decreased by 67% to 103 million and the loss from operations increased to 132 million. The company's doing a good job slashing expenses, and the big news that came out of Upstart's earnings report was that it secured a lending partner. Of course, Upstart has had a hard time finding lending partners because investors are cautious about lending money out when the fears of an economic recession are increasing considerably. So Upstart is a platform that brings together borrowers and lenders. The hard part for it has been the lenders. They haven't been able to get lenders to fund loans on the platform. Borrowers have been there. It's the lenders that have pulled back. So they made an announcement that they secured multiple long-term funding agreements to deliver more than 2 billion in funding to the Upstart platform. That should help the company recover and return to funding these loans and generating a good amount of sales. Because look at this, lending partners originated 84,000 loans in its most recent quarter. That was down by nearly 80% year over year. 80% decrease in loans year over year. And it's not like consumer demand fell by 80%, right? The amount of borrowing that people wanted to do stayed relatively the same, maybe down a little bit, you can say, but it didn't fall 80%. The difficult part was that the demand for lenders to fund these loans decreased considerably, right? The people that wanted to make these loans, their willingness to make those loans fell considerably. And so the fact that they secured this was a big deal. And if you had been following Upstart stock, you will have noticed a big pop in stock price right after the earnings were announced because of this announcement securing the 2 billion. That's been the big headwind for Upstart stock. So looking at finally in the valuation, I chose to use the forward price to sales ratio. Upstart is trading at a forward price to sales of 2.436, while SoFi is trading at a forward price to sales of 1.899. Historically, Upstart has been the more expensive stock compared to SoFi looking back over the last 15 months, although that disparity you can notice has narrowed significantly. Looking at January of 2022, Upstart was way more expensive than SoFi according to this financial metric. It was trading at a forward price to sales close to 24. It's now down to 1/10 that valuation at 2.4. And you might be asking, why were investors willing to pay more for Upstart stock compared to SoFi? Well, Upstart has the bigger potential in terms of profitability, the business model, compared to SoFi's business model. Upstart is aiming to be a platform that brings together borrowers and lenders using artificial intelligence to make approvals on loans, and then it takes a fee when it creates a transaction. And so that profit margin can be huge, right? Because it's not funding any of the, it doesn't it might be funding some of the loans right now, but that's not what it wants to do longer term. It just wants to bring borrowers and lenders together, which traditionally, if you look at other platform models like that, they are very lucrative and very profitable, because all you're doing is bringing a transaction together, and all of the revenue that you generate is almost all profitability, and then you just have to invest to maintain the platform. Whereas SoFi is actually a bank. It has operations, it funds the loans, it takes deposits, and so all of that is more costly, and its operating expenses are higher, and so the profit potential in the long run, the profit margin potential is not as high as Upstart's. That being said, if I was to pick one of these two stocks to buy right now, SoFi is the better stock to buy. SoFi is the better stock to buy. I would not want to own Upstart going into an economic recession where Upstart's lending model has not yet been proven. So I would go with the safer investment in SoFi. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.